their experience. So Anila here, she is the founder of Igugu Global. It's a climate finance fintech, pioneering green finance and sustainable infrastructure across Africa. With a background as the head treasurer of Barclays, she brings a valuable insight into the complexities of securing financing and emergence of new forms of green capital to support sustainable development. Judy, she is the partner at J. Francois and Associates, and she also leads a reality group and specializes in complex real estate and technology solution transactions in emerging markets. And her experience and expertise is particularly relevant in the context of financial flows from the diaspora to Africa. And a large chunk of this investment is directed towards real estate, right? And so her insights will shed light into the growing interest from the diaspora in Africa real estate and the impact of this influx of capital that has on the market and local communities. And Daniel, he is the co-founder of Sesto Global. It's an innovative real estate platform that streamlines the process of searching for, financing, and verifying property units. And it's known as the Zillow of Africa, a technology that transforms the real estate landscape, enabling more transactions and improving the transparency in the markets. And Dana will shed some light into the vital role of technology that plays in the reshaping real estate in Africa and how platforms like Sesto are paving the way for more efficient and accessible markets. And Uche, he's the vice president of International Development and Finance at Simon Property Group, one of the largest owners and operators of real estate. And he has extensive experience, 20 years in diverse real estate investment development and asset management, which span across hospitality, retail, and multifamily properties. And so he's going to shed some light on some of the challenges that he's faced in investing and developing in Africa. He's also has an MBA from Columbia Business School, and years before he put together this panel similar to this. So this is a full circle moment for us. And last but not least, Fred. Fred is the senior VP of Toll Brothers, one of the largest multi-family apartment developers, land and community developers, and through his substantial domestic and international business experience in real estate, financing, and housing, he'll provide valuable perspectives on the challenges and opportunities in real estate development in Africa regarding attracting investments and ensuring access to affordable housing. And so with that, I will open the panel to shed some light about your journey and what motivated you to build, invest, work within real estate and across Africa as a whole. Yeah, whoever wants to go first.
Thank you. So thank you for the very generous introduction, and to all of you who are joining us on Graveyard Shift. How I came to banking and real estate in particular was from the 2008-2009 financial crisis. I was graduating university at the time, and a lecturer came in on one of our last days of the year to explain that Lehman had defaulted, and that subsequently crystallized into millions of people all around the world losing their homes. And I was just absolutely astounded that a few failed trades could have such severe impact for so many people. Fast forward, my first role in the bank, as a result of the financial crisis, I had joined Barclays, and Barclays had a global mandate because they'd been burned in Spain and Portugal, where they'd had borrowing arrangements that gave mortgages to people where the first installment of your mortgage would only be paid 5 years after you'd taken out the mortgage and bought the property, because the idea was that property values will always rise. And when the bank got its fingers burnt in real estate in the south of Europe, the first decision they made was, we're pulling back from real estate worldwide. And we're sitting in Johannesburg thinking, well, we're in Africa, people need houses. we haven't been lending in this way. And that's the very beginning of my journey with real estate and commercial property and the financing thereof across the continent. It started very contentiously, and really since that point has been a career built around shining a spotlight on how African development challenges are different, and the financing response to those needs to be different and specifically tailored for our context.
So it's interesting you talked about the global financial crisis, because that's sort of like where I am today. That I think is also the point where I sort of made a transition. Do you hear me now?
Yeah.
Better?
Yeah.
Good. Okay. So the global financial crisis as well, for me, sort of like what sort of led me to where I am today. I was, like everyone else, finance at the time. I had done management consulting, did a lot of that. Got to work with some interesting real estate deals, New York City Housing Authority, hospitality deals. The global financial crisis happens, and it was just something that was missing. I just thought, I wanted a change. And at the time, the governments or those countries were sort of looking for people to come back and try to make an impact. I thought actually I wanted to do, I wanted to go to SEPA, right? I wanted to go and help people and help the continent. And someone helped me recognize that actually real estate is also a way of community development and impacting and shaping the environment. And so I decided to go the MBA route, but Africa. Specifically worked, took a role in hospitality investment fund as part of ARM, Asset Resource Management in Nigeria. That was where we're stationed, with the mandate of looking for opportunities to invest in hospitality across Africa. Fast forward, that led me to the hotel project that we did, the 4 Points by Sheraton in Lagos. Anyone you can look it up, 4 Points by Sheraton. So I had the opportunity. I did that project from the ground up, 2.5 years, 13 pounds lighter, 6 kilos, whichever way you want to go, and a lot of experience. And that sort of, I realized that I wanted to focus on the international aspect of real estate. And so from there I came to Colombia, and then fast forward, that's what I do today. So I do investments in real estate.
Hello, can you hear me? Yes, I can hear myself. So my route is more the little person's route. I actually started in real estate after law school. I just started looking at the trends here in the U.S. and particularly in New York, and saw how the market was shifting towards Brooklyn, where I lived at the time. And so I started buying properties in Brooklyn, in Bed-Stuy in particular. But also at the same time, my best friend is from Ghana. We went down the street to Columbia to undergrad together. And so after law school, I had gone to Ghana and fell in love with Ghana. Always felt my connection to Africa. I am Haitian American, so I always felt my roots were in Africa. I am Yoruba though. I am not from Ghana, but I have a love for Ghana. And so through the help of her father, I bought my first piece of land in 2008 in Ghana. And then we bought another set of land in 2010. And I started working and developing in Ghana and the Caribbean and in Florida. So, so I'm more of the little guy route.
Great. Hi everyone. So my background into real estate really started in tech. Background's more in the Web3 space. So I had early Bitcoin exchange, was doing mining, and really got into this the idea of digitizing land registries and digitizing land records on the blockchain. And I moved to Ghana in 2015 to do a research project with the Ministry of Lands. And the idea was around how you can digitize land titles, and that would be utilized to make it easier to buy property, easier to get mortgages. But what you really see, and what we saw when that happens, is that there's a gap, right, between getting a land title and getting an actual property. You know, the land title's not gonna tell you if the cement was quality, if it was built to spec, if it's off plan, if it's gonna finish. And so from there, we set up CESO, which we say is digitizing the land registry through the private sector, and utilizing verified transactions to create a trusted platform for real estate.
Hi everybody, I'm Fred Cooper. My journey to being sitting here at 130th Street really hasn't taken me very far, since I grew up right at 91st Street, where my mom still lives, but it's been circuitous. My first experience in Africa was hitchhiking across North Africa, Morocco, Algeria, Tunisia, way back. Got me interested in emerging markets in general. When I came back from that trip, it was 1980, interest rates were about 18%. New York City was becoming, the government itself was becoming the largest landlord in the city. It was taking back it owned about 100,000 units that landlords had basically dumped. A lot of them were occupied. I started out as a housing organizer and organizing rent strikes and things like that in Brooklyn, and did that for a few years. Then wanted to learn finance, but chose to do it through Kennedy School of Government as opposed to business school. After that, I worked for New York City's Economic Development Bank for 5 years, then 4 years with another developer, and then got recruited to Toll Brothers, which is one of the largest home builders in the U.S. To be clear, Toll Brothers only built in the U.S., so my interest in Africa really is through relationships I've developed over time. I'm working kind of as an advisor through the Stanford Seed Program. I've mentored a number of developers. I've worked with, there's a company called Acorn in Kenya. It's the largest student housing developer in East Africa. I host them. I've been back and forth with them a lot. A couple of other developers in Africa, and just gotten very interested in that. Wharton has an international housing finance program where I've lectured. So a lot of different touch points, and so it's on a personal basis.
All right. So my next question is, there are rapidly developing projects across Africa, like Alara City, Echo Atlantic in Nigeria, Tattoo City, Kenya, Senegal Smart City. So what are some of the specific examples for you in sustainable infrastructure projects that are currently transforming African cities, and where do you see the most growth and opportunities emerging from these types of projects across Africa? Yeah, anyone can take this, or?
Yeah, I guess it's good start. So what I'd say is that there's a lot of more developments moving towards infrastructure, and we say like developers for developers. I always like to say that building any project in Nigeria or throughout Africa, right, can really be an extreme sport. That a developer has to have many jobs. You have to potentially be into dredging. You have to be into land reclamation. You got to be into soil testing. So many things that would not be on the responsibility of a developer in America falls onto the developer in Africa. And so because of this, the amount of cost, the amount of expertise that you need makes it very difficult for large-scale projects to hit the market. So what we're seeing now, throughout the continent is developers kind of taking a step back, rather than saying we're going to build the housing, the infrastructure, and everything. They're saying, why don't we do the roads, the pylons, build the lots, and create what we call service plots, right? So this is land that already has roads, that already has access to electricity, already has access to water. So a developer, all they need to do is come in, find their plot that's already been verified and tested, and we know that it can support the development that, the number of floors that we're looking for, and you can actually just start there. So I think that in the future, we're gonna see a lot more of these developers for development for developers, right? So kind of a pre-step of building the infrastructure. And I just want to touch there that even in Lagos State, in Nigeria, it's a key strategy of the government. There's a department called the LSDPC, the Lagos State Department of Property Construction, I think. And what they actually do is, if you see, most of the major developments are actually joint ventures with the government. So the government will give up the land to the developer and take equity in the project so that they can offload the costs of infrastructure development to the private sector. So I think that's a massive, massive trend that we're seeing, and it can really help any investor buy into a place that already has the security and kind of initial investment put in.
I was gonna say, you left out procurement, right? So developers also have to go to Spain and buy kitchen equipment, right? Yet you're involved in every single thing. You're buying power, you're buying generators, right? Like, you literally have to be involved. Sorry, go ahead.
No, I was just going to chime in and say exactly to that point, maybe taking a step back to give it a little bit of context for those who have not yet been on the continent. Africa has an estimated $1.5 trillion infrastructure gap, right? And from a sustainable infra investment perspective right now, the fastest pipes and capital flows are into energy and the transport value chain, whether that's like building road or getting aviation and shipping infrastructure there so that we can drive more trade. Right, the Africa Free Trade Agreement has a massive intra-Africa mobilizing the billion people we have into the world's largest open and final open market. And a lot of the sustainable city projects that we're seeing is just really leveraging the opportunity that's been created by things like the Lobito Corridor, where we see this large transport investments and large energy investments going. Contextualizing it a little bit more, when people talk about energy in Africa and large energy projects, there's large projects and small projects. If you think that we've got just over 1 billion people, there's 900 million people without consistent access to energy, right? The stats is 600 million, but when you count the number of people that have access to energy but don't use it because it's too expensive, that's 900 million people, including many women that are using still wood to prepare food at home. So the sustainable infra opportunity is across the value chain, and we see a lot of sustainable city developments that are attaching themselves to the large, maybe triple P type investments in energy and transport.
There's two types of challenges. One is where, as you described, you find a piece of land you've developed, you become a land developer, of a piece that may not have been developed before, but then there's still millions of people flooding into existing cities and, huge slum areas in urban, in the cities, and you need to figure out solutions for those as well, because obviously people, in a lot of cases, there's examples of people who you could build a new city somewhere, even affordable housing, that if it's too far out, people can't get back into their jobs, so they migrate back to the urban areas, and that's a different set of challenges, I would say, in terms of dealing with the really internal growth of the core of cities.
Let me also, in terms of the challenges, I'm not going to name specifics. These are things I've been part of, but I don't want to name any names. But I think if you're talking about broad-based infrastructure, right, obviously this is like at a scale of governments, right? A lot of the countries don't have all of the capital, so it is going to require public-private partnerships to get that done. Well, one of the, again, I'm speaking from experience, we did a major toll project and sourced the financing, 30-year concession. Now a new government comes in place, what do you think happens to that 30-year agreement, right? So the ability to have those agreements respected and honored going forward, I think it is also a challenge, right?
Yeah, and I want to touch on that point as well, and also what Frederick's saying is that especially this type of developers, of course, work and you're building the new city, this new Cairo, a lot of cities, the Akon city that I was trying to do, didn't live up to it, but this concept of building a new city and moving people to it is good in some ends, but generally towards the higher end of the market, right? And so when we look at, a stat people always use is like what solutions can provide for people who live on $2 per day, right? And I'm sure many people have heard that aspect, but if you look at what type of house can someone afford who lives on $2 a day, there really is no house that, that can make up that cost. And so when we also look at cities in the future, we're gonna have to really think of any material science engineers here. We need definitely some brains thinking about new material types, right? So the houses of the future in Africa will not, in most emerging markets, are not going to be built out of cement, are not going to be built out of imported materials. So one thing we see several developers looking at is houses made out of laterite. Laterite is a material that's found in the ground all over the world, similar to adobe in Arizona, that you can mine out of the ground and build adobe houses. And so we also need to think of exactly what are the solutions for mass housing, because if people have to live so far away from where they work, there's many examples like this. There's people who know Nima and Accra, the whole area was that they built another city for the people to move them to. It was very central. And what did they find right afterwards? They all moved right back. And so you have to think about, what can be built affordably and that can actually be scalable.
Okay, on that note of affordable housing, this question is to Fred. As cities across Africa continue to grow, the challenge of affordable housing has become increasingly urgent. And so many countries, high mortgage rates as well, and limited access to financing can hinder to meet the rising demand for housing. So question to Fred, given these challenges, what are some innovative mortgage strategies or financial models that you have observed that could be adaptable to improve access to affordable housing across Africa?
Well, there's a lot of steps. I don't know necessarily that mortgages are the only solution. There's a whole, as you mentioned, land title's a big issue. How do you control construction costs? How do you provide dependability? Developers want dependability before they'll invest. How do you develop properties that are more energy efficient so the operating costs are lower? But there are, for example, we were talking about the urban areas. There are things like microloans that, where people can borrow to fix up their house. They can repay, they can borrow in small amounts. There are more case studies recently with, the IFC, International Finance Corp, the US IDFC, International Development Finance Corp, where they've helped subsidize, provide sort of backstops for mortgage facilities in some of the West African mortgage institutions that have allowed them to basically tap into the global markets with investment grade ratings, because they have this credit support and build up a base of funds that they can then use to provide more reasonably priced mortgages. In Kenya is a country I know reasonably well. Government borrowing, I think right now is like 17% for a 10-year bond. That's very expensive, and that's the most risk-free rate. But if you're trying to bring mortgage rates down, you kind of have to separate from that and get into the international credit markets. And so there's some examples more recently of those sorts of institutions being formed that have provided, you need more capital for mortgages. Obviously, if everybody has to pay cash for a house, you're limited in the number of buyers that can become homeowners. So if you can create mortgage credit facilities and then create ones that are actually, some reasonable priced interest rates, you have a chance to really expand home ownership and also encourage developers who are more willing to build if they know they can exit a home that they built, someone's there to buy it from them, so they're not stuck with it. They can reflow the cash flow.
Yeah, and like you can speak to green financing.
Yes, our company, People Global, People means treasure. We play in the green and climate finance space, and I couldn't resist, Fred, you referenced Acorn as an African player that you referenced, that you've worked with. Acorn is a student housing developer or affordable housing developer in Kenya. And they were actually the issuers of Kenya's first green bond. We believe that, projects understanding their climate and sustainability exposure and being able to speak to that as they go to market is an unbelievable opportunity to unlock a lower cost of capital. And we've seen that insofar as the Acorn issuance in Kenya. Several projects in Nigeria have been beneficiaries of that, not least of which is Eco Atlantic. If you're familiar with Lagos, Eco Atlantic has the longest sea defense wall in West Africa. That's a project that was financed by Axis Bank, initially at around 17.5%. And through being able to relook at the same transaction through a sustainability and a climate lens, and in terms of its resilience value, that was a transaction that we were able to restructure into a green bond that dropped the cost of financing from 17.5% to 14.5%, and then further created an opportunity to flood in international capital as it was dual listed on the London Stock Exchange. So green and sustainable finance is one aspect that we see as a potential accelerator of flows of finance to the continent. But being in a room like this, we can't not reference the fact that already multiple African countries are experimenting with initiatives such as diaspora bonds in Kenya, in Cabo Verde. So we're starting to see really a lot of nodes of focus in terms of how we get to sustainable, inclusive, and vibrant African cities.
And speaking of diaspora's role, there's been a growing interest from the diaspora in African real estate, and over the years we've observed how this investment landscape has evolved. So my question is to Jimmy, what do you believe is driving the diaspora's interest in investing in African real estate, and have you seen this interest change over time?
Yeah, so I would definitely say it's changed vastly since I purchased my land in 2008. The prices have gone up significantly. When I hear that people are purchasing the land now in Ghana, for example, it's almost triple, maybe even quadruple what I paid. I think that it's a natural interest because when you look at the market and you look at the world and where resources are, I'm kind of feel like most people are behind. I don't know why people haven't taken interest in Africa sooner, but I'm glad because it kept my prices down. So, but I think it's also, we have, the diaspora has grown here in the U.S. I look at this room and I went to Colombia. We did not have an African organization. We had a Black students organization, but we didn't have an African organization. So for me, this is full circle because I remember protesting against Colombia's investment in South Africa. And so to be here now saying invest in Africa, it just feels great to do that. And I as someone who, my family's from the Caribbean, from a country that's in turmoil in and of itself, the natural thing for me to do was to connect to the motherland. And I think that's most of my peers and colleagues, that's what we feel. It is not easy. I'm not going to pretend. It is not for the lighthearted, trying, as Daniel said, buying land on the continent is, and then trying to develop is not an easy task, but if you have a strong team, using companies like CESO to make sure you vet. CESO did not exist when I bought my land, so I am so glad that they're here now to help my colleagues and help myself. But I think you need to work with the local people is essential. We Americans have a habit of going to other places and wanting to impose our what we believe how things should be, and that was something that I had to learn. That that's just because this is the way we do it in New York, it's not the way it's going to be done in Accra, and being patient.
On the topic of technology, Daniel's question is to you. What what is the role of technology in real estate transactions? So seeing platforms like Sesso influencing the future of Africa's real estate, what steps are needed to ensure adoption and scalability across the continent?
Definitely. So I would say firstly that prop tech and real estate technologies is a massive space, and there's so much opportunity throughout it, from sales to verification tools to rental tools, right, to crowdfunding investments. So would say that if you look into the market, there's a lot of very exciting projects that are out there. But I'd say the key thing that we are looking to solve at Sesso and most platforms is providing trust and transparency into the market. And so right now there is a massive issue of being able to find verified lands. When people come to look at developers, generally people are skeptical, right? The general mindset right now buying property in Africa is that you need to be very careful, which you do. But on the other hand, I would say for every developer that's maybe a bad actor, there are companies in Nigeria, Ghana, Kenya, throughout the continent who have been building successful real estate, for decades, right? And so there are a lot of companies that are doing great work, that are doing, very legitimate projects. And so what we look to do at Sesso is a marketplace of all verified properties where we do the vetting beforehand and make it easy when you go into our platform to know that everything is legitimate and your transaction will go together smoothly. And I think the real estate tech space has really transformed since COVID, of course, where most people were relying on physical, in-person business and physical tours. What you find now is that many people are selling real estate across the continent, sight unseen, people buying it from abroad, people doing Zoom tours and that M. So it's definitely a rapidly growing market, and it's all about one, how to make sure people can do their verifications very quickly, and helping developers and players on the ground, be able to show their transparency, because many of the good players, of course, they want to show their projects are legitimate and that they can jump on board. So prop tech, very exciting space, and I think everyone's looking at how to get involved in some of that.
Just to add to that, another type of verification, there's a lot of people in the informal sector that don't necessarily have as a monthly pay stub or a weekly pay stub, and they're developing tools for verifying income that can enable people to prove that they have the ability to pay. And over the long term, if you start to show that there's more reliability in people's ability to take mortgages and pay that, theoretically you should then show that there's reduced risk, which should bring down borrowing costs as well. So that's another area that technology is rapidly evolving.
Okay, I have a lot more questions, but we have to wrap up. So I asked this one last question. What is your vision for the future of Africa cities, and what makes you optimistic about it?
Maybe I'll speak. So like I said earlier, I did Nigeria, and I go to Japan, Korea, right? A certain level of development there. And then I've spent a lot of time in Southeast Asia, right? And I circle back and I look at where we are in Africa, okay? So I have spent a lot of time in Southeast Asia, right now, Indonesia, right? And I'm looking at myself, like, I'm in Indonesia, how am I not in certain countries in Africa? So I think where I look at where they are today, and I look at where we are, just to be optimistic, I thought about this. I want to put in the context of time. I'm looking at a 10-year horizon, right? As an institutional investor, right, who has to make these decisions of where to go and place this kind of capital. 10 years ago, I probably would not have been in these countries in Southeast Asia. So first, governments, where we are with our politics, okay? Now you see, whether we argue or not who won the election, who didn't win the election, but if you look at broad-based, elections happen, there's a little bit of a scuffle, they sort it out, and someone goes and they stay 4 years, maybe they do it 2 terms, and they, right? So it's a little messy, but if you the trend is good, right? So, and I'm saying, because again, I'm in Mexico and all these different countries, I can get, as an institutional person, I can get comfortable with where that's it. So that is happening. That gives you a certain level of comfort. 3 things that we look at when we look at making an investment. I try to determine, can I build it? Whatever it is that I want to build, if I want to build a Ritz-Carlton versus a Courtyard, a hospitality space, or if I want to build a Simon Property Mall versus, another Grade B or C, whatever it is I want to build, can I get, because I feel confident that I can get the permits and every kind of authorization that I need to build it. Again, I would say that I'm getting comfortable because you guys have talked about titles. When I did 4 points, I was literally chasing people away from the land every week because they would tell me, oh no, my family was the one that, so I literally had to get police to stop people from coming, right? Today, I feel like I can get comfortable with title. I can get comfortable with knowing that the paperwork and the authorizations will come. Right? So that's one thing that I say is headed in the right direction. Second thing is, can I lease it? Do I have a customer? Okay. Not there yet, but you can sort of see that coming as well, right? Obviously, more cities. Typically, on average, you're going to look for cities where there's a population of over 4 million, right? So some will not meet that criteria, but there are a lot of cities in Africa that are heading in that direction. I think the real challenge is capital, cost of capital. It's just very challenging to get things done, and I'm saying as an institutional level, right? Folks that are here that are institutional, money's not the problem, right? They will go and they'll deploy the billions. But I've got to make those projects work. I have to generate a certain level of return. So if I'm going to Nigeria and the free money from the government is 15 to 18%, Egypt it's 27%, right? That's just me sleeping in bed and giving money to the government. That's the return I'm generating. So I have to try to make projects that work above that threshold, right? To make projects work and generate 30% return, I mean, somebody, when you guys figure it out, you guys should give me a call, right? So it makes it challenging to get things done, to put that kind of capital in. And also, if you're going to go into these countries, you're not going to go in all equity, right? So you're going to, at that cost of money, you're probably going to do 50% equity, 50% debt. Every day you're late at 20-something%, your project is just, Atlantic, right? That's going to be a challenge, right? If you don't speed it. I got 4 points done in 2 years for that reason, because the amount of money that it was costing us to do every quarter, it would have killed the project. So I think capital, if we talk about capital and how this capital is rated, it is a perception of risk, right? That's how the credit rating agencies assign risk to our bonds. So I think as things start to get more stable, as our governments and our elections and everything in that regard start to get more stable, it hopefully starts to lower the risk profile, starts to lower the cost of our borrowing, and then, I say 10 years down the road, it makes it encouraging for an institutional person to start to look at our countries.
Thank you. So we have 1 or 2 questions. One?
Thank you first of all for this panel. So many nuggets in there. I love my question to you all is the global economy, because as you say about capital, as you say for capital for the developers, it's capital for the little man as well. And what we have here is we have assets here. So where can we find a global financing program? And it may be digital, it may be, it may be coins. Is there a way where we can finance assets here and get the money there? Because this will really help grow close the gap. Yeah.
So are you asking, meaning leveraging our assets here, to be able to use over there? Daniel will probably know a little bit better about that with the.
Advice of that.
Oh,
That's okay.
I'm sorry,
Sorry.
okay.
So, this week, yesterday I was in DC, and a huge theme of the IMF meetings this week, as it was when we were at UNGA at the end of last month, was a conversation around reforming the global financial architecture, right? And when we're in these rooms, we all understand that there's no shortage of money, right? So we really talk about how do we get the trillions to be cut down to billions to millions to a check in the farmer's hand. And that, a huge aspect of that is the technology play. So when we think about what should we be aspiring for Africa, right? It's more open, it's more transparent, and it's more accessible markets, regardless of what sector you're in. And it's questioning around how do we use technology to create that conduit that cuts the checks smaller and smaller. From a green finance perspective, we always think about it as how we accelerate the flow of capital to low carbon, climate resilient, and inclusive projects and communities. And there have been a few conversations around sustainability throughout the day and whether this is something Africans should be concerned with, given that we're not the generators of the pollution problem or the carbon problem. And we necessarily have to see climate resilience as a development imperative, right? We're not the creators, but we're the most vulnerable to climate change. And when we look at that vulnerability, it's not just because we have no infrastructure, which is a huge aspect of the problem, but vulnerability also has to do with how well do everyday Africans respond and recover from catastrophic climate events. So when we start thinking about building adaptive capacity, building more inclusive communities, it all gets back to this question of, do we know who's in the communities? Are the markets open, transparent, and accessible? And can we cut the checks small enough from the trillions to the billions, the millions? And what helps you recover after a disaster like Harlem if you happen to be on the west coast of Africa?
Yeah, and I just want to say very briefly that a lot of these baking products, right, we're just in like the nascent times. I think that's both a negative but also a positive. That baking products take years and years to get together. So everyone should be thinking about products to bring accelerate capital flow and start the conversations now. There's credit credit savings banks. There's the small regional banks that can get involved in this. And so it's about having those conversations and having the getting the capital ready to deploy. And that's why I'd say one of the reasons I'm most optimistic about the real estate markets in Africa is that, as Junie said, land is growing 3x, 4x, 5x in Ghana, and this is with no mortgages yet. This is with very difficult to get visas. All these issues, and the prices are still going up. So what are the prices going to be when everyone can get a mortgage? When everyone can get financing like that? So I have to say the best time to buy real estate in Africa was yesterday. But the second best time is now. So
I just want to say something also just for the little guys in the room who, so I started off with using my assets here in the U.S. to be able to buy in other places. So, and I know most of the room is full of students, so I'm going to really talk to the students. All of you are at Columbia Business School. You will get jobs at great places, Morgan Stanley, wherever. Make sure you stay in contact with one another. A lot of my financing came through private, friends and family, starting off with friends and family, more so friends than family. Because I am the one, the first generation of my family to graduate from an Ivy League institution. So, I look to my colleagues and my peers, and we pull together. I have an all-Black investment group that what we do is we fund Black-owned, majority Black-owned businesses and real estate in urban communities. we are also invested in Africa already, in Mozambique and in Kenya. And so, and these were my fellow lawyers, judges, doctors, that I, went and I was just like, hey, you got money, I need it. So, it doesn't have to be on such a, high level. You can start off with, we started off our investment group where the minimum was $5,000, the entry to get in, because we didn't want it to be so prohibitive to, the average Joe. But there's no cap. We also have people who put in 50,000, 100,000. So just in terms of being creative, where, like I said, there were no mortgages when I bought my land. Now, my land is worth 4 or 5 times than what it was. And so I now can use that land to get more financing.
Awesome. So with that, we'll wrap up the conversation. As Danielle said, the time to invest was yesterday. So, well, thank you for an awesome panel. Thank you. So we'll head to Cooperman's comments to wrap up this session.
It's been a minute. Still looking fly.